report. Asian markets, they're trading lower following a weak handover that we got from Wall Street.
I expect to see some very bad numbers coming out of the economy in the first quarter.
Bank Nifty is the weak link. The FI selling is visible.
Challenge is really the state government legislations that are coming in the way.
We had started little slow. Probably we were building up our capacity to test, and we did not go out of stock.
Flat start, yes, it's point. Okay, now it's getting a little worse. It's about 35 points down.
We find, valuations attractive. The movement in the stocks like Kotak Mahindra Bank, etc., nothing has changed from yesterday or 2 days back to today. But the fact is that, you've got a demand-supply issue.
Companies to increase or go up from 24% had to take a board approval.
We understand that Tata Sons, at least so far, has not been informed from Shapoorji Pallonji officially on its intention of pledging of its stake.
This particular is a deferment of the installment, and the interest will continue to accrue during the period of deferment.
The lowest point of trade, 82.62.
Okay, it's been a rank bad day for the market. In fact, we have had 3 days now in which the market at Nifty level has moved 400 points intraday. The day before it was on the downside, yesterday it was on the upside, and today it's on the downside once again. And in most days, it's the Bank Nifty which is the problem point, down about 5.3%. Advanced decline still at 1:1, but really the price damage in large caps like banks has been quite sharp. And once again, the Dow futures indicating that perhaps the market has to prepare for some more global weakness. And with, a truncated week, tomorrow being holiday, that adds up to problem. Surabhi, hi, good afternoon.
Good afternoon, Anuj. All things, put together, everything that you pointed out, it seems like it's advantage bears big time as we're getting into this last hour and a half. But I take your point on the Bank Nifty, but also today, a lot of the other parts of the market have seen plenty of selling, whether it's Reliance, Infosys, TCS, L&T. It's a pretty broad fall today, wouldn't you say?
Yes, you forgot to add lever, which was holding out so far, and yesterday hit an all-time high, Surabhi. So that is the one which is now down about 5.5%. I think, again, Surabhi, it boils down to the kind of markets we are in. You'll remember yesterday in closing bell, we were making this point that the close yesterday was quite disappointing, the move between 3 to 330. And I think the big money was sensing something. This bravado that we had for last couple of days into year end, that the FI selling has ended and now, the worst is over. I think that's coming back to sort of bite us. While a lot of people are giving examples of 2008, and I have also discussed that every crisis in stock markets is different. The 30s crisis was different, the 87 crisis was different, the dot-com bubble crisis was different, the global financial crisis was different, and this is different as well. So what the market right now is trying to price in is the economic disruption coming out of lockdown and this coronavirus. Nobody knows how that will sort out. Let's assume that we end the lockdown on 15th April. On 16th, you're not going to run across to a car dealer and buy your car. That's not going to happen. It's going to change your habits for some time. So that's what that's the new reality, and the market's coming to terms with that. Well, can the market go back and test the previous low of 7,500? Who knows? I think the answer lies in what's happening with the US market. Till the time we keep seeing this kind of Dow and Dow futures moves, it's practically impossible to have any kind of prediction on the market. All you can do is just have your risk management in place, trade the market on a day-to-day basis, and if stocks get to your prices, add them in your portfolio and hope that things at some point will sort themselves out.
Yes, Dow futures, and the fact that the number of cases, every day is a guessing game on just how the numbers are going to move for us here in India and of course in the US as well. So there's no getting away from the volatility, at least as of now. Well, we have a power pack lineup to take you through the next hour and a half. So let's get started. It has been a sea of red. It's been a pretty weak day right from the word go. and the market right now nursing about 4% losses on the Nifty. We'll be discussing the scenario that plays out from here on. We have Nilesh Shah of Kotak Mahindra Mutual Fund joining us in just a moment. We'll also get chatting with Ratnesh Kumar of Bob Caps, find out if they're looking at any individual stocks, if they have any ideas going for long-term portfolios in this market. Vinay Khattar of Edelweiss Investment Research is going to join in as the street tries to wrap its head around the financial impact of this human crisis. So we'll see if they've got some estimates that we can work with. And of course, all our regular fundamental guests are also going to be with us. SP Tulsian of sptulsian.com, market expert Prakash Diwan, and Kunj Bansal of the Sarthi Group on the day's stock action. And technical ideas, trading advice, as always, coming up with Ashwini Gujaral, Mitesh Thakkar, and Prakash Kaba.
Okay, by the way, just look at Bajaj Finance's last 10-minute chart. That is a problem. That's a stock which was trying to attempt some kind of rally through the day, and it's getting brutally sold into right now. The market at index level down about 4.5% on Nifty and about 5.5% actually on the Bank Nifty. We have our first guest joining us. Nilesh Shah is now joining us. He is of course MD and CEO of Kotak Mahindra Asset Management Company. Nilesh, good afternoon. We've discussed this with you in the past as well. What do you tell your investors right now? Because it's all pointless right now to talk about the market levels. Nobody knows, me, you, or anyone, on where and how the market will bottom out. But how do you wade through this kind of market?
So, our recommendation to investors, like yesterday, like today, and like tomorrow, is the same. Please maintain your disciplined asset allocation. These are the most challenging times, and your asset allocation will come handy for you. You have to be overweight equity if you believe there is a medical solution for coronavirus, and try to pace yourself into the market, because we never know where the bottom of the market is. Undoubtedly, economy is going to go through challenging period. Undoubtedly, companies will go through a challenging time. But at the end of the day, a 3 months, 6 months disturbance in the history of a company over many decades is a small number.
Okay, yes, that point is taken. Nilesh, what do you make of this relentless selling that we are seeing in private banks? Kotak, of course, is down 10% for technical reasons, but there are others like Axis, ICICI. It's just relentless the way some of these stocks have been butchered over the last few days. What do you think the market is pricing here?
So there are multiple factors which are coming into play. In some banks, we have seen deposit outflows, and that's creating doubt about the banks. In some cases, as you correctly mentioned, there are technical factors. In some cases, there is fear of NPAs which will rise in this economic uncertainty. In some cases, there are issues related to margin. So there's not just one factor which can be ascribed to a fall. Multiple factors have come together to corner banking sector. And one thing which is emerging in banking sector as well as in other sector is that big is becoming bigger and better. There is gradual migration towards safety, towards quality, towards non-levered companies. And clearly that migration is going to play out in various forms across sectors. And in banking and financial services also, we will see big becoming bigger and better.
Nilesh, good afternoon. Thank you for joining us today. I have a different question now, more from a market perspective, market stability perspective. Can you give us a sense of industry-wide cash levels right now, mutual funds? And we will get the numbers for the month of March in a couple of days. But I'm guessing perhaps equity inflows might not have been as robust. In that case, what are the cash levels, and should we expect mutual funds to keep supporting the market, or could that become a risk?
Fortunately, so far the data which I have for first 3 weeks of the month, SIP flows as well as equity flows by and large has maintained pace as in February. We should be nearer to 5-digit number, not necessarily 5-digit number, but nearer to 5-digit number in terms of flows, almost as good as February. Industry-wide cash levels obviously have come down as we have relentlessly bought into this fall, but these flows have kept on coming courtesy the SIP culture, courtesy the work by mutual fund distributors in reaching out to their clients. And if these flows continue, undoubtedly mutual funds will be a buyer at this valuation, at this level. So everything will depend upon the flows. Other advantage which mutual funds have this time is concept of asset allocator or balance advantage fund. In those funds, we had cut down our equity exposure anywhere between 25 to 40% across the board. And now, as the markets have become cheaper, we have increased equity allocation. So some amount of money has shifted from debt into equity in this correction. So this buying which you have seen over last 1 month, partly it is enhanced equity allocation in balance advantage fund and asset allocator fund. Partly it is the flows which we have received.
Okay, so that explains the buying that's come in, because the asset classification has shifted in favor of equities. I'm just going to pursue on this question for just one more bit, Nilesh. I think there's a research note that's doing the rounds which suggests that the last time industry-wide cash levels at mutual funds dipped to about 3 billion, mutual funds started selling equity stock. Now, I don't know if this is true, and I don't know if this is how it plays out, but is there a threshold beyond which funds start selling stocks to perhaps shore up cash levels to meet redemptions or any eventuality?
So I can't really talk about the industry, but if I was running fully invested portfolio at, let's say, 12,000 Nifty, I'm unlikely to run high cash portfolio at 8,000 Nifty. Most of the fund managers would like to remain fully invested at this valuation rather than take a cash call. If you remember, in 2008, most of the successful fund managers remained fully invested. They were fully invested at every level when valuation was becoming cheaper and cheaper. And those guys have really done well from a portfolio point of view. Of course, they did take short-term pain between September and October 2008 when markets corrected. But by March 2009, most of them were sitting on a pretty position. So there is no firm number in terms of cash balance which we'll have to maintain. As long as I have confidence that more flows are going to come at cheaper level of valuation, we are most likely to run fully invested portfolio. There might be some small amount kept to meet day-to-day normal redemptions, but unlikely to raise cash balance at this valuation in market.
Okay, Nilesh, I tell you what, we had some of the auto sales numbers today. I'm sure you would have looked at Ashok Leyland's numbers. Hard to believe, and you know what, we've had so far only not even 10 days of lockdown. So do you get a sense that the auto stocks may be in for further fall, another 20-30% perhaps from here on as well?
So in the auto sector, Anuj, there are a couple of factors at play. One thing is relating to big ticket purchase item. As you correctly mentioned that on 16th of April, you are not going to run to buy a commercial vehicle or a car. You are probably likely to defer a big ticket purchase item. That's going to have an impact onto the automobile sales, and that will be reflected into automobile share prices. The second thing is related to in China, we have read a research report that there is a steady increase in demand for automobiles as people have moved from shared mobility to personal vehicle. Now, at some point of time, this may start playing out in Indian market as well. And then there will be positivity towards automobile shares. One thing, Anuj, as a thumb rule, you'll have to analyze how much discount we give for the drop in earnings visible in this quarter, next quarter, and probably a quarter beyond that, versus what is the asset value of the company. Yes, 3 months, 6 months, company's profitability will get impacted, but can they have asset value which is meaningful? To give you an example of 9/11, post 9/11, New York Stock Exchange remained shut down for a few days. And when it opened, aviation sector stock had crashed to rock bottom because people were afraid people will not fly anymore, the security cost will be high. 1 month after that, from that rock bottom prices, aviation sector became the best performing sector in that market, simply because they had fallen far more and that factored in far more negativity. People continued flying, airlines adjusted their security cost, and overall the loss to the aviation sector was not as much as market was fearing. So one is the business prospect, the second is what market is discounting. In couple of cases we have seen companies are today trading below their cash value, and which is probably exciting company insiders, and I'm quoting insiders in a positive way, not in a negative way. Promoters, people who are associated with promoters, their buying is seen in the market on a gradual basis, on a calibrated basis. Promoters and their associate know the fair value of their company. And across companies, we are seeing either buyback being announced or promoter increasing their stake. So we'll have to discount between the asset value versus the dip in the profitability in next 1 or 2 quarters.
Okay, all right, so 376 still down on the Nifty. The cut is well over 4% as we speak. Nilesh, just in terms of safety zones or hideaways, would you go back to the drawing board and to maybe FMCG or perhaps pharma? Because I know as a house, a lot of your fund managers were looking at playing the investment cycle, the cyclical move. But given the environment, does it perhaps call for a return to some of these safe havens?
Undoubtedly, we'll have to recalibrate our investment strategy. Things are rapidly changing, and there are certain behavioral changes which are going to occur. For example, the low ticket consumption items will probably continue with limited fall, but the big ticket consumption items is likely to be pushed back and deferred. Clearly, we'll have to reflect that into our portfolio. There could be a change in behavior towards shared mobility space, from cars to hotels to other real estate. That will have to be reflected into our portfolio. There will be sectors where government, RBI and other regulators will come to support, will provide relief package. There will be sector probably where the relief packages will not be as adequate. We'll have to again factor that into our portfolio. This is the time where we'll have to keep our eyes and ears open and try to process as many data as possible without any biases, so that we can create portfolio which will be suitable for the coming uncertainty.
Okay, all right, Nilesh, thank you very much for joining in and giving us your perspective on the market, which is having once again a pretty rocky day. We need to take a very quick break on that note, but don't go anywhere because the market analysis continues and more commentary coming in as well. We will have Ratnesh Kumar of Bot Capital joining in on the other side.